Alright, that's enough of that music. Hello guys, hey, what's up, do nothing? Hello, I'm doing great. Hopefully you're doing great as well. Welcome guys, welcome to Thursday's live stream. The week is flying by here. Let's bring this down a little bit more. Alright, hopefully that's enough for the music. I'm kind of trying to listen to the playback here. I think we're good. Okay. Alright. Okay, so hopefully you guys have read the title. But most importantly, the description. So we're gonna look at the broader markets and just kind of dissect and then digest what we're currently looking at in the markets and what is happening to the markets, and that's the reasons why it seems like everything is being supercharged to the upside. Okay, so first off, we had to take a look at software. Why? Well, today we saw a lot of software, specifically cybersecurity stocks. Hey, welcome guys, welcome. Absolutely rocketing higher. In the CFO Discord yesterday night, I actually gave out a swing trade idea. Well, not really a swing trade idea, but one of the technical trade idea for NATH. And today, it ended up breaking out right after market open. So I made sure that everyone was able to see that there's a very nice tight coiling price action on NATH, and I was looking for that breakout over $87, and today it just blasted right through with quadruple the amount of the daily average volume. So we had the average volume at 2 million, and then the today's daily volume was at 8 million, little over 8 million. So it's 4 times the volume here. And what makes this really interesting is that we saw other software stocks and other leading cybersecurity stocks. Here's DDOG, here's Crowd, right? So, hey, welcome guys, welcome. Come on in, I just began. Make sure you guys hit that like button down below. Okay, and we see other stocks like ZS as well. And they've all began to just rocket higher since yesterday, and all of these have been very much lagging, right? They're all laggards compared to the overall benchmark market, which is the S&P 500. And so on top of all these software and cybersecurity stocks going up, we saw the overall market breadth slightly negative today, but in the last hour we saw market breadth improving once more, and throughout the entirety of today and yesterday actually, tech was very strong. That's right, tech. So if you guys take a look at NASDAQ QQQ, right, we can clearly see this from yesterday and today, even on Tuesday as well. And if you guys remember, NASDAQ has been really just lagging for the most part for the last month or so, for most of September, compared to the overall markets, right, or the overall benchmark market, which is the S&P 500. And so with the help of NASDAQ, we saw all of these overall tech stocks being lifted up higher, and including Snow, which we have a very nice long-term position in. So if you guys didn't know, in the private CFO Discord, we got in Snow on October 4th, if I'm not mistaken. Yeah, October 4th, during this push-up higher right over 112.50-ish is what I remember here. And so this one has been paying off really well, ended up at 70% return so far on Snow. It's looking very, very good for the long-term position for Snow. But what I'm trying to get to you guys is that IGV, right? This is the tech software ETF. And I posted this chart back in, I believe, September 9th. Let me actually give you guys the Twitter chart that I posted because I said something very, very interesting that you guys should remember from this point forward. All right, so let me go all the way here. Okay, so right here. Okay, so I said on September 12th, excuse me guys, that IGV software ETF is showing major reversal to the last couple of weeks, bouncing off of lower range support of $76 and now staying right underneath the high range resistance of $89. Is this a sign of a weak market? I think not. And then on October 5th, I gave another update that the hammer from last week on the day that I posted this, and the close over that $89 resistance level was looking very, very good. And then so yesterday we got that massive, well, 2 days ago actually. So just like what we saw on NASDAQ, we saw IGV specifically holding a lot of strength, and it was able to hold $89 as a new level of support. And so the price continued to move on up higher, and I love the fact as we continue to make new all-time highs, look what happened to the volume. We saw the volume increasing, right? We're seeing the volume stair-stepping higher. And that's exactly what we want to see when we're looking at a major breakout to the upside. Okay, so this is something that you guys should always remember, that when we're looking at major leading groups like IGV or even just the SMH, right, the semiconductor sector ETF. Okay, this is very important to know, because even semis right now are slightly lagging, I would say, compared to IGV or the tech sector or software tech sector ETF, which has been making all-time highs, and we got a position. But overall, okay, when we are looking at QQQ itself and compared to the S&P 500, you need to see what's actually going on underneath the hood of the markets, right? Because obviously there would have been a good chance that I would have missed this entire move up higher from the overall tech sector if I wasn't paying close attention to what's actually going on underneath the hood of the markets, like option flows. And what exactly have I been seeing in the option flows? Well, for example, like snow, I saw a lot of longer term expirations being bought, specifically call contracts, right? So I've also seen put sales as well that go all the way out into 2026 on mega cap stocks. So for example, Apple, Microsoft, right? Both of them have been seeing large call buying and some fairly sized put sales. We've been seeing some activity in Meta, right? Meta has been seeing a lot of activity as well. And so what I'm trying to get to you guys again is the overall leading groups and mega cap stocks have seen continued strength, even if the overall markets were seeing weakness in late September and early October, right? It seemed a little bit whipsaw and a little bit uneasiness as the VIX continued to move up higher, and also today ended down, but okay, I believe it revised at the end of the day here. So I updated the chart here. So the VIX is still staying over the value of 20, and that usually is not a good sign. However, right, as we continue to see some good underlying buying coming in, both in options and both in just volume and all of these major leading groups, it kind of leads you to believe that these people with huge amounts of money are looking to supercharge the markets through these leading groups, and especially the lagging sectors and lagging groups like today, software and specifically cybersecurity stocks, right? And so we're seeing the overall broader market continuously seeing very, very good volume, very good bids from each single sector and groups. We're seeing even the defensive sectors like utilities being essentially an AI play now, since these data centers for AI are needing so much power that these utility companies they literally have to update to keep up with the demand that we're seeing around the current AI revolution that is underway. So we're seeing the bullishness, quote unquote bullishness, being it's basically visiting every single sector, like financials, like healthcare, and that's not a bad sign, right? Usually in a bear market or during corrections, whenever we do see these defensive sectors like healthcare, even biotech sometimes, financials, utilities, they begin to go up, right? They begin to see some good large volume buys and bids. However, during a bull market, we tend to see almost a sector rotation of bullishness. Right, it's not just a simple sector rotation where we see one sector seeing huge profit taking and seeing that profit taking, that money outflow going to another sector, and we're seeing a bunch of money inflow into that specific sector. We're not seeing that right now. We're actually seeing a broader, spread of bullishness going into each and every single sector. Does that make sense, guys? Right, so this is the reason why I've literally wanted to title this stream as "What's Supercharging the Markets?" And so it's essentially this entire bull market that we're seeing, just literally elevating every single sector in the market that's available to trade. Right? I mean, let me even give you guys an example here. So XLF, right? Financials. XLF is actually looking really constructive here. In fact, we're making a very, very nice ascending triangle here. And I wouldn't mind taking a long position, maybe even tomorrow, if you decide to break over $45 here. Right, so this is the major level of resistance, or I guess I would say, well, not $45, I meant 46, but maybe specifically 45.85-ish, right? And we obviously have this very nice ascending support trend line to create this ascending triangle or an overall bull flag. And so, with financials just looking really, really good, the financial sector, and we have a bunch of earnings coming out next week as well to start out the earnings. First round of earnings coming out will be major banks and financial institutions. XLF here is still making higher highs and higher lows, all the while making a very nice constructive ascending triangle or bull flag during its current consolidation phase of about 7 weeks. So again, my point being is that all of these sectors, including what we like to consider as defensive sectors, are still seeing a lot of bullish flow. We're seeing simultaneous in tandem movement of prices just simply moving up higher. And that's the reason why I told everyone in my CFO Swing and Watch report this weekend on Sunday that there is a chance that we can make new all-time highs, and that's exactly what we did on Wednesday, yesterday. And so there's still a lot of room left for us to continue to move up higher and possibly even hit that ridiculous target that I've set for the S&P 500 ETF at 600. And for the S&P 500 index, I'm looking at 6,000 as well. So basically, guys, okay, make sure you guys let me know if you guys understand what's going on and what I'm saying here. Let me know in the chat. Hey, welcome, guys. Make sure you guys smash that like button down below. Hello, hello, hello. Okay, so this supercharging of the markets are just overall, there's this bullish sense in tech and specifically AI. And again, as I've stated on Tuesday, AI is literally visiting and influencing every single sector that we are in now, even the industrial sector, right? XLI. This is the ticker for the industrial sector. Look at this, all-time highs. We've been continuously making new all-time highs consecutively, back to back here, right? Even yesterday. So again, these are one of the times where you don't want to be missing out on any large moves to the upside, because every single sector is being supercharged by tech itself, right? And that's kind of the way I see it. I'm seeing AI literally influencing every single sector. I mean, it is going to happen. It is happening now. And this influence will continue to spread out into every single smaller groups of leaders, leading companies, or maybe even just smaller to mid-cap companies as well, maybe even for Russell 2000 stocks, and maybe even for biotech stocks. We're already seeing signs of that as well, even if biotechs have been struggling for the past couple of weeks. So again, all of this is literally a supercharge for the markets to end up higher by the end of this year. And if you guys remember, in 2022, right, mid to late 2022, specifically late 2022, what did I say, guys? 2023 to 2026 are going to be the years to be actively involved in the stock market. Right, I gave you guys so many signs and warnings and reasons why that I believe that. And so far, what has happened so far, guys? 2023 to 2024 is the beginning of a new bull market, and we're still in the very early stages of a bull market. Now, do I care if there's going to be a correction? No. In fact, I would welcome a correction, maybe even 2025, early 2025, if we continue to see this supercharging of the markets into the end of this year, as we literally have about 2 months left of this fiscal year of 2024. So again, if there's a correction in 2025, I will welcome it, because it will allow for more constructive price action to occur, for more sideways and consolidation to give us more room to continue to the upside as we head into the final year of 2026, where you want to be active. So again, you know, all these mega cap stocks have been grinding up higher into new all-time highs, like Meta over here. I mean, even on the intraday time frame, and you guys can even find some really good day trading opportunities too if you guys want. Very nice wedge here on Meta too. There's been a lot of these major flags, intraday wedges. There's very bullish looking flags everywhere today and yesterday. For example, not just Meta, but our current position on Snow. If you take a look at the 15-minute time frame, we're still making very, very textbook higher highs and higher lows. But as seen here, right, I mean, let me just use my marker here, okay? Right, textbook bull flag, another textbook bull flag, and yet again today, another textbook bull flag, as our position is now up 70% on Snow. So what I'm saying here is, guys, don't be FOMOing, right? Look at the right setups, right? I mean, even for Snow, we're looking at this very, very tight sideways base that we've been forming on Snow at its all-time low areas, right? I mean, I think we did hit a new all-time low back in, yeah, on this day here, on September 6th. And from that point forward, it just continued to accumulate and accumulate, and eventually we had this nice squeeze up higher, and thankfully I was able to catch an odd purchase on Snow. Specifically a call option contract that expires next year. And so if you guys want to know what our current position is on Snow, make sure you guys become a reader tonight. And how can you guys do that? By DMing me on Instagram at ChartsFocus1. Again, my handle for every single platform, including Instagram, is ChartsFocus1, as you guys can clearly see here on the YouTube channel, right? So again, okay, this overall supercharging of the markets, I'm pretty sure it's going to end in a correction, maybe 15 to 20% correction, who knows, right? But that's not what we're going to worry about right now. We're going to continue to go up, right, and climb the wall of worry, as they say. Okay, I don't care that we're seeing bond yields rise. I don't care that the VIX well, I might slightly care in the short to midterm that the VIX is heading up higher, like we've been saying for the past couple of days. But from a bigger picture perspective, you guys have to understand that we are in a bull market. We made a low in I believe October 2022, and the beginning of 2023 is when we officially began our bull market. And even then, even in 2023's amazing performance out of that 2022 bear market, that was a pretty muted reaction to the upside to start a new bull market. And that's the reason why this new bull market in 2024, as we continue this uptrend higher, we've been seeing such an amazing return so far in the overall markets, specifically the S&P 500, as we've made that new all-time high price print yesterday, right? And so yesterday was, again, a pretty clear sign that leading groups will now eventually try to catch up with the rest of the markets, and that's the reason why we've been seeing NASDAQ starting to finally catch up since Tuesday and eventually to today as it made higher highs and higher lows. Now, not just the software and specifically cybersecurity stocks that have been going up due to a lot of option flows and a lot of good bids coming in, but semiconductors, right? So SMH, like I've shown you earlier, hasn't done too much as a leading group. However, its actual leaders within this sector and in this overall industry, NVIDIA and AMD have both been seeing really good long-term and out-the-money call buying with some good, sensible, and pretty logical put sales, especially on NVIDIA. There's been a lot of put sales, and on AMD, we're seeing a lot of good call buying that goes all the way out into 2026. So again, we're seeing the overall leading groups seeing strength, and we're seeing the lagging, well, these leading groups that have been laggards starting to pop back up higher, right? And that's the reason why, again, we've been in snow, and our position is at 70% at close today. And all of these individual leading stocks in these big leading groups are now starting to see a lot of good call buying, specifically today on NVIDIA. I don't know if you guys track the option flows, but we saw a bunch of out the money call contracts, right? From like 160-ish to around like 169 or even just to 170. A bunch of outright buys came in NVIDIA, like a crap ton of lot, right? It ranged from 5,000 to 10,000 contracts on every single strike from around 160 to nearly 170, right? So around 169 is where I believe the buying stopped. And that was in the March expiration of next year. I mean, think about that, guys, right? That's about 5 months out or nearly 6 months out. So, it's, to me, that says something, right? If you're seeing all of these, even for example today, the lagging, previously leading software stocks and cybersecurity stocks starting to pop up higher, while we see the current leaders now that haven't been lagging seeing still huge option flows, we're gonna be seeing that end of the year run that I've been talking about since last quarter, and there is a good chance, based on the seasonality trends that I've also shown all that data to my CFO Swing Watch Report readers about, I believe it was 2 weeks ago or maybe even 3 weeks ago. I gave them a huge breakdown of the trends and the data points that I was researching, that there's a chance that we could be seeing in an election year, we could be seeing positive 3 months for the entire quarter of, well, this year, right? The last quarter of this year, quarter 4. Now, of course, we have that overhead, possibly very volatile catalyst, right? Huge catalyst, okay, coming up, which is the elections. And so, yes, we can be possibly seeing some profit taking into next week's OPEX, right? The monthly OPEX on, I believe October 16th? Or excuse me, October 18th. So that's something that you guys have to remember too, right? We're gonna be seeing intraday, well, intra-month, or I guess the middle of the month, mid-month, volatility most likely happening as people continuously actively move around their funds and continue to take profits and enter into new positions to be prepared for a possible dip into elections, which could also, believe it or not, I mean, I've been saying this for weeks and months, could be another dip buy, right? And I've been saying this since September, buy the shallow dips. And guess what? All the dips have been shallow, right? From a bigger picture perspective, you guys are taking a look at the weekly or the monthly time frames on either overall benchmark markets like the S&P 500 or NASDAQ, every single dip has been relatively shallow. And they have all been great opportunities to scale into long-term positions or start new positions if you guys don't have long positions yet. And so that is my same message for you guys tonight. Make sure you guys remember why we're seeing this overall supercharge of the bull market and why we can continue to head up higher into quarter end and into possibly next year, right? January, February, and even March. So the entire quarter one of 2025 could be very, very good for us and possibly a very good time to be taking profits from the current positions that we have right now. Okay, I'll be giving you guys a lot more details in the CFO Swing Watch report, possibly in the next couple of weeks or maybe into the elections, into election week, which will be the first week of November. Okay, well, the first full week of November, which is November 5th. Again, the elections for the presidential office will be held on November 5th, which is the very first week of November. Right, so again, I have been seeing, and we have been seeing, right, this consistent trend of the markets dipping every single first week of each month, right? We saw that in August, September, and October. However, every single dip since August has been getting shallower and shallower. And on October, I mean, I even gave you guys the now public, which is again previously private, TA video of the CFO Swing Watch report. I even stated in that video that I wouldn't be, surprised. I wouldn't be unhappy or negative if the markets continue to possibly move sideways in between the current all-time high level of 574.50 and the previous all-time high level of 563.50. And guess what? We eventually broke out from this current all-time high resistance level of 574.50, and we're now using it as a level of support. But if we pull back and if we go back to this range here as we head into November elections, I would not be unhappy about that. I mean, it's another buying opportunity, right? And so this is literally what I've been envisioning since 2022, where we continuously see really great active trading environments where it's really easy to just simply buy every single shallow dip. As long as we're not seeing an official, negative 20% or negative 20% plus corrections that could possibly lead into market crashes, as long as we're not seeing that, okay, I wouldn't want you guys to be actively buying, right? Those dips, if you're having such market conditions of negative 15 that falls into negative 20 and then eventually negative 25, we don't want to do that, right? We want to be looking out for these shallow dips that will happen as we continue to see slight volatility increases and just an expansion of overall market volatility as we have been seeing for the past couple of trading days, if you guys take a look at the VIX. But now, as long as we continue to head into the monthly OPEX for October, which is next Friday on October 18th, there's a good chance that we see another smash of VIX towards October 18th, and eventually after that we can possibly see a little bit more selling after October 18th OPEX week, right? And so again, the last 1.5 weeks, a little over 1.5 weeks of October can be a great time to lock in some long-term position profits while keeping the principal amount. And as the overall markets can continue to sort of prepare for November elections and the very first trading week, full trading week of November, and again, that date for the presidential elections will be held on November 5th. Is all of this making sense, guys? Right? So again, there will be dips, right? I'm not saying there won't be. There will be dips that you guys will have the opportunity to get in and buy those dips. Right, I've been warning you guys. I mean, it's a clear warning that that every single shallow dip has to be bought, and I've said that since September. If you guys remember that, and if you guys comprehend what I'm saying here, and if you guys happen applying that to your own trading, make sure you guys smash that like button down below. That's how I will know that you guys are seriously taking my words to a T, right? And actively applying it to your own trading strategies. All right, and of course, if you guys want to know how we trade and how we are, positioning ourselves to get ready for November elections, and also just how, where we are putting our money in. Like, for example, like Snow, like I've shown you guys, make sure you guys become a reader of the CFO Swing and Watch report, okay? You guys will gain access, simultaneously gain access to the private CFO Discord to gain access to all the other extra swing and day trading ideas and executed trades that we have done so far in the past and that we have on currently. Okay. Alright, so I kind of want to give you guys that little breakdown today of what's really supercharging the markets, and hopefully that made sense. Now, before I leave you guys here, I want to give you guys a quick look on the bonds market, right? So bond yields specifically, right? Treasury bonds, treasury yields. So a lot of people on FinTwit has been, well, they all have been, for people who have posted about this, been very concerned about the yields moving up higher. But what has been happening the entire time? The yields have been going up higher since last week. The markets have been going up higher. Specifically, the market that matters the most, the benchmark market, or the S&P 500. And in fact, we had another pop in the treasury yield here, the 10-year treasury note yield, or if you guys want to take a look at TYX, which is the 30 yield, right? The 30-year yield. All of these yields popped up today. But what do we see? We saw overall market breadth holding up, relative strength going across every single sector. Okay, we didn't see any massive large moves down. That, well, if we did see them, we saw a nice pivot back up higher from those lows on every single sector today at close. Even the markets decide to pivot as well. So with these, you know, if you're just looking at the treasury bond yields like the 30-year or the 10-year, you guys have to realize how much we've fallen since April's peak, or even last year in October. Right, so everyone who is just going on FinTwit saying that, you know, I don't know why the market's not going down while the yields are pumping up higher, they're not looking at the bigger picture. Okay, so, you know, as we've been tracking TNX, right, mostly so far for this entire year, we've known that it's going to make lower lows and lower highs because we've seen that happen. And at that same time, we were long bonds, right? TOT. Okay, this is the 20+ year treasury bond, and also IEF. All right, this is the 7 to 10 year treasury bond ETF, and even IEI, which is the 3 to 7 year treasury bond ETF. And so, in fact, even today, all these bonds are actually looking like they want to pivot back up higher. Why? Well, specifically, if you take a look at TOT, I might even send out a potential longer term swing trade for next year's expiration for option contracts. TLT is right back to that previous breakout area back in July, right? Mid to late July. And so I wouldn't be surprised if you create a nice higher high pivot point from a longer term perspective. Again, we need to be looking at this from a longer term perspective. And if you take a look on the weekly time frame here, it seems like we just wanted to retest this rising, curling up higher weekly 50 SMA. And so if we end up closing over this weekly 50 SMA by tomorrow at market close, I will most definitely send out a potential swing or position trade for bonds. Why? Because when the benchmark interest rates are being cut by the Federal Reserve, and we're seeing a rate cut cycle, we will see yields going down and bonds will be very, very bullish, and we'll see bond prices increasing again. The bond yields and bond prices have inverse relationships. If you guys didn't know that, make sure you guys know that. It's a very, very simple concept, so don't get it confused. There's a lot more details and a lot more nuances to that, but I won't get into that tonight. I went over that a lot actually back in 2022 in the CFO Swing and Watch report, and even mid to late 2023 if I remember correctly. So again, bonds are looking very, very good. don't be fear-mongered on FinTwit about bond yields are moving up higher and we're not seeing the markets go down. Those are the people who have been short, right? And they're literally getting squeezed out of their short positions, and they're scratching their heads as to the reasons why we're seeing bond prices going down, bond yields going up, and overall yields just straight up moving up higher for the past couple of days, and equities are moving up higher in tandem, and they're scratching their heads and then wondering why their positions are failing, right? And they're losing profits or whatever profits that they've had. So again, the overall markets are in a supercharged mode, and there will be even more volume coming in to the overall markets as we head into the end of this year with more catalysts to come. Okay, not just the elections, but I'm sure there'll be other catalysts that we don't expect to come out that can expand the overall market volatility. The VIX, right, which is the volatility index of the S&P 500. So, with all of this in mind, make sure you guys remember what I've said since last month. Buy all the shallow dips. Right, I'm not saying you guys should be buying, if you do see like a -10, -15% correction, try not to buy that during the time that we're seeing that move lower. That's not what I mean. We need to be looking at the overall technical price action and obviously volume to consider whether or not these tame pullbacks or dips are ready to be bought once more, and if buyers will come back to defend this current amazing uptrend that we're still seeing in the overall market. And again, just this week alone, since yesterday or even Tuesday, we've been seeing the lagging groups and lagging sectors starting to catch up to the markets, which means we still have a lot more ammo left to make new all-time highs in the S&P 500 and to allow NASDAQ to finally catch up and also have its own moment of a new all-time high price print. Does all of this make sense, guys? And for everyone who's just joining in, whoa, wow! I think we hit a new. Did we hit a new milestone here? Yeah, I think so, guys. We're actually hitting 55 views here so far in the live stream. Wow! I think last time was like 40. I think like 44 or something. But now we have 50 views here as we are currently live. So that's amazing to see, guys. But to everyone who's just joined, make sure you guys like down below on the stream if you guys are comprehending what I'm saying here, right? It's important that you guys understand, comprehend it, and eventually try to apply it to your own trading accounts. And of course, if you guys want to know specifically what we're trading, what we currently have right now, make sure you guys become readers of the CFO Swinger Watch report so that you guys are able to receive these very, very in-depth newsletters in your email inboxes every single Sunday night, along with a private CFO Swinger Watch reports technical analysis video. And on top of all of that, you will gain access to the private CFO Discord where I can chat with you guys 24/7 and give you guys even more value on top of the weekly CFO Swinger Watch report. Again, the CFO Swinger Watch report. Right, it's where I provide a lot of really high quality A+ swing trade ideas that you guys can also turn into day trades. Just a little asterisk there if you guys were saying that, hey, I'm not a day trader, but can I join this report? You most definitely can, right? Plus, we have a bunch of day traders in our own private CFO Discord, so don't let that deter you if you are, thinking about joining the CFO Swinger Watch report. All right, and again, if you guys want to join, specifically DM me on Instagram, which is, again, my handle for Instagram is @chartsfocus1, just like with every other social media platform that I am on, like YouTube, for example. All right, and if you guys do DM me, and if you guys go out of your way to DM me, okay, make sure you guys let me know, right, where you guys came from, okay, and you guys will be receiving a 50% off discount code for your first 30 days. This is an opportunity that you guys can take hold of, so don't let it go. All right, Well, that is it for this week's live streams. Thank you guys so much for joining in every single Tuesday and Thursday night. We're, again, exponentially growing in this channel. We're seeing more and more people joining in these live streams. Again, I really thank you guys for joining in every single Tuesday and Thursday night. I know it might be really late for, you know, the mid or East Coast time zones, right? The Central time zones or the Eastern Standard time zones. But if you guys are from those time zones, I really am grateful for you guys even taking the time in your late nights to join in and listen to what I have to say. So hopefully all of these streams have been really helpful and been able to guide you guys to more success, right, with your own trading strategies and for your own, you know, swing trade or even day trade ideas that you guys are looking to execute. All right, I'll see you guys next Tuesday at the same time, 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time. Thank you so much for watching.